Rapid progress in product and process technology, the global competition and wide fluctuation in currency exchange rate and raw material prices demand excellence from corporate management accounting system. They must provide timely and accurate information to measure and improve productivity and to control costs. They also need to report accurate product costs so that pricing decisions, introduction to new products and responses to the appearance of rival products can be made with the best possible information. Last, decentralized organization requires systems to motivate and evaluate the performance of managers. Besides that, senior executives communicate to subordinate and decentralized managers the goals and objectives of the organization. In today's economy, an excellent management accounting system will not by itself guarantee success. With an effective management accounting system, the best outcome occurs when managers understand the irrelevance of their system. However, there might occur some danger if the managers do not recognize the inadequacy in their management accounting system.
Teruskan semua itu.
What is the opportunity? The increased demand for excellent management accounting system occur at a time when the cost for collecting, analyzing, processing and reporting information have been increasing. With many production processes under direct control of digital computers, information can be recorded in real time for analysis of performance. In highly automated environments, every transaction can be captured for subsequent analysis. Thus, extensive systems now can accurately measure and attribute the resource demands in a diverse product line. Timely and relevant managerial performance measures can be computed and disseminated throughout the organization. Nowadays, the designer of management accounting system can use advanced electronic technology to devise reporting and control systems that are more accurate.
Let's talk about management accounting roots. So dating back to the ancient civilizations, management accounting has been found engraved in the stone tablets. 500 years ago, a Venetian monk named Fra Pacioli described the basics of a well-functioning double-entry bookkeeping system. So during that time, businesses were conducted in a very small scale, which means that they put a less emphasis on the management accounting information that could be utilized for the purpose of the business strategy decision making. However, as a consequence of the Industrial Revolution, which enables businesses to achieve economies of scale, it allowed enterprises to commit a significant amount of capital into their production processes. So, because of this increase in the investment that enterprise owners put into their business, they introduced a more complex, hierarchical organizations that create a new demand for accounting information. So this information is needed to ensure that a very structurized organization can extract important accounting information and can be used for the pricing decision strategy. So because of this, conversion processes are getting more complex. Previously, it is supplied at a price through market exchanges and performed within organizations. Now, a demand arose from measures to determine the price of output from internal operations. Thus, management accounting developed to support the profit-seeking activities of entrepreneurs for whom multi-process, hierarchical managed enterprises were more efficient than managing conversion processes. So, at the early stage of management accounting, was simply to serve the needs of owners and managers, focus on conversion costs and produce summary measures such as cost per hour, cost per pound produced. The measure included labor and material and involved some attribution of overhead costs. So, the goal of having this structurized process costing is to identify the cost of the intermediate and final products of the firm and to provide a benchmark to measure the efficiency of the conversion processes. So, in effect, management accounting provides substitute for the market prices that were absent in managed enterprises. In the middle of the 19th century, enterprises has the opportunity to coordinate new acquisition of raw materials. Without management accounting information, this organization would not have been able to capture the full potential gains from increased scale of operations. So, effective management accounting is necessary to coordinate efficiently the logistical, conversion, and distribution activities of these enterprises, and provide summary measures of the performance from decentralized and dispersed managers. So, a lot of ratios are developed at this stage, and they are operating ratios, revenue ratios, cost ratios, or even revenues to cost ratios in order to fully maximize accounting information that could be used for decision making of the organization. So, improved transportation and communication combined with economies of scales also permitted the growth of large distribution enterprises, particularly retail store chains such as Marshall Field, Sears, and Woolworth. So these three organizations are exemplary organization that is capable to fully utilize accounting information for the benefits of the organization itself. Because of the management accounting information that has been fully optimized by this organization, they could supply products and services to the customer at the most affordable prices, and also they are one of the biggest retail store at that time in the United States. So, these examples reveal that the management accounting information was developed to expedite the management of process-type industries such as textile and steel conversion, transportation, and also distribution. So, therefore, we know that nowadays management accounting is very much structurized kind of accounting system that is used to determine the price to offer to the consumer, and it is used for the decision making strategy of the business enterprises, so that the price decision that has been made by the organization is the right decision. So, the final developments in management accounting occurred in early decades of 20th century to support the growth of multi-activity diversified corporation. For example, the DuPont Powder Company faced problems to vertically integrate manufacturing and marketing of organization, or even deciding the most profitable allocation of capital to these different activities. So, because of that, they developed and fully understand the importance of return on investment in ensuring commercial success of each operating unit. Because of that, because of their adaptation of decentralized multi-divisional corporation developed to capture economies of scope, which is gains from sharing common organizational function across a broad spectrum of products.
For the loss relevant, at 1925, particularly all management accounting practice that are practiced today had been developed. For example, cost account for labor, material, and overhead. Budget for cash, income, and capital. But 1920, the pace of innovations needed to stop in the mid-1920 because the corporate organizational form developed by companies such as DuPont and General Motors proved to be the model for money operation for the next half century. Initially, as a management accounting system because less relevant to corporate operation and strategy, many firms began to be dominated by executives who like to run the
Academic lead astray. Why did university-based researchers fail to note the growing and outdated of organization management accounting system? We believe academics were led astray by focusing too narrowly on a simplified model of behavior. Influenced strongly by economists' one product, management accounting academic found little value in the cost allocations imposed on organization by financial accounting procedures. 60 years of literature emerged advocating the separation of costs into fixed and variable components for making good product decisions and controlling costs. Thus, the academic literature concentrates on elegant and modern approaches to analyzing costs while companies try to manage with integrated systems. As management accounting system become less relevant and less representative of the organization operation and strategy, many companies become dominated by senior executives who believe they could run their firm. But as product life cycles are shortened and more costs are incurred, directly traceable product costs become a much lower fraction of total costs. Consequently, traditional financial measures such as ROI become less useful.
Next, the accounting for caravans. This was what's rule for the accounting to compute the overall profitability of the venture and to distribute the net proceed, the retaining among the initially invested. Further argue, investor or beneficiary versus SEC or FASB ask the accountant to compute the expenditure profit during the third quarter of 1487 when the caravans was revering the Persian descent en route to India. Profitability is not, because in the early unsophisticated day of accounting 500 years ago, the investor understood that allocating the total profit of the expenditure to the period as a short or the month. Meaningless of the argue to allocate project profitability to short time period behind the life of the project does not imply was to obtain valuable indicator of the short-term progress. And the current competitive technological environment are probability better indicator of the company's short-term performance that is quarterly earning. Cash flow is important and to know pattern and structure of the company, cash receipt and cash expenditure, but must know the sources and use of the cash is very different from working hard every month, every quarter to proceed complete income statement and balance sheet, be complete with the amortization, capitalization and equal.
Mentality perlu kuat, quality kan jadi hebat. Jangan kau patah semangat.
Now we have come to the final part of this video, which is the innovation needed to further develop management accounting information. So, what are the innovation that is needed right now? So, management accounting should be designed to support the operations and the strategy of the organization, because management accounting information is it's an analyzed information of the organization from financial, operation and everything, and it is being used to formulate the strategy involving the trajectory of the future plans of the organization. So management accounting needs this kind of innovation that is flexible in supporting the strategy of the organization. Second, the technology nowadays exists to implement systems radically different from those being used today. So we know that technologies such as AI, artificial intelligence, big data analytics nowadays should be used and implemented within the organization to fully capture every single details that is generated by the organization and use that kind of information in the management accounting so that decision-making processes can be made effectively and accurately using the right information. So, but in order to achieve this kind of innovation, there are several things that we are lag behind. So the first, in terms of knowledge. So knowledge can be obtained through experimentation and communication. So communication could occur between the right person, for example, academic researcher, or also the industrial experts or practitioner that has been creating or producing management accounting reports for the benefits of the user. So the last part is the spirit of innovativeness during the rise of management accounting stage must be recaptured by academic researchers who are committed to developing new concepts. Without this, if we can't cater this kind of problems, we're gonna have a huge problems in the coming era.
Bismillah, pastikan